Alright guys, let's get started. Welcome to another episode of Crypto Corner. My name is OJ, a crypto analyst since 2016, and today I will be talking about Bitcoin again because right now we are really in a Bitcoin market. Now, why I'm saying this? Well, we can see that we do have quite a green day today. I mean, we did have a few pullbacks over the last few days. The market is really choppy right now, and it's taking a lot of people by surprise because it's very undecided. I mean, when we drop heavily, and then when we pump heavily as well. Look at that, 29, almost 30% up in the last 7 days for Bitcoin, 20% for Ethereum, 21% for BNB. I mean, not many of the outs are having that kind of performance right now, which is also why I'm talking about Bitcoin market. I mean, this is the token metrics indicator. You can see here clearly that we are in a Bitcoin season, as they say. This is one of their indicators that I really like. On the 8th of March, actually, we dropped from kind of mid of the range, kind of being in between, to being in the hands of Bitcoin. So right now, it's not really a great time to be in outs. Even though there are some outs that are making, decent moves and everything, the dominance of Bitcoin is growing. And it's growing, as you can see here, over the last few days, growing quite fast from 42.5% all the way now to 46%. So definitely it's not really time for altcoins, and this is why I'm exiting a lot of my positions. I've already exited a lot of my positions in altcoins. Right now I still have a few altcoins that I'm looking into exiting as we see some pumps. If we don't see pumps, then I'm just gonna be holding them. That's all right with me. But look at that nice rounded bottom that we're making here on the chart of the Bitcoin dominance. This is, even if we see a pullback, making sort of a cup and handle formation, even if we see a minor pullback, we are going to continue this upwards momentum in Bitcoin until at some point we really get exhausted. I mean, the RSI is showing that we are here in the upper region, meaning that a pullback, at least a minor pullback, is to follow. This is why I was drawing here this pullback. Of course, it doesn't have to play out exactly like this, but more or less this is what I'm expecting for Bitcoin. Also, we are seeing that the dollar is weakened. This is the Dixie, the dollar index. It's weakened and it's going down, which is also why Bitcoin is pumping right now. Now, we still have not revisited here the 0.618 Fibonacci ratio, this lower circle that I have here marked. This is the golden Fibonacci ratio, and usually as we start dropping, first the 0.50 is the one where we can find support, but also the golden Fibonacci ratio is challenged a lot of the times. So I feel that this is the direction of the Dixie right now, and if it continues that downwards momentum, then Bitcoin is definitely going to continue its upwards momentum. This is the rainbow adjusted RSI for the Dixie, and as you can see here, we are just coming out of an overbought region, so we still have more room to be going down. And last time we were up here, we made this big drop, and this big drop actually coincided with this red, 4 days of red candles here that dropped it quite significantly. So right now we do have 2 of these red candles. Are we going to see at least another couple or even more? Very likely, to me at least. All right, now in terms of altcoin market, we do have some altcoins that did perform quite well over the last 7 days. Stacks performed very well. Singularity, oh wow, this was quite a strong one. I actually sold out of my Ajax tokens because I just wanted to lock in some profits. On these kind of green days, in these kind of rallies, it's good to take profits because inevitably at some point there will be a pullback, and or even a bigger pullback, like a correction of the market, and at that point I will be refilling my bags. But right now, I've exited positions. I exited Singularity. I didn't have immutable exits, so one of the tokens that I'm watching rather than owning. It did well, perform really well, 45% on the weekly. Govi token, I also don't have it. It is on my watch list though, but I'm waiting for a proper pullback in this token before I enter. Veracity, a token that I talked about when I was in Vietnam, so maybe 2-3 weeks ago. that performed really well, 41% in the last 7 days, really good performance. Render token, I managed to sell out of it as well. I exited, maybe I have a small position still left, but during this rally 35% in the last 7 days, I exited a lot of my positions because I wanted to lock in profits. I also did the same with FET, the Fetch token, Fetch AI. This is another AI token. I talked about it in my portfolio series, 3 videos I posted where I talked about the coins in my portfolio, why are they in my portfolio, what are they doing, what I like about them. So 33% in the last 7 days, as well as Phantom, 37% in the last 7 days. I mean, these are tokens that I was selling. And then, GRT, another token that I sold out of. That was another one that I managed to lock in some profits. And I sold out of CQT, even though I don't really see it here. Perhaps in the last 7 days, it didn't really do that much. Yeah, there we go, 20%. But at around 16 and a half, 17 cents, this was a good price for me to sell because I was buying it at 12 cents, and before that I was buying it at 8 cents. So I wanted to lock in profits on this one. It did really well for me. This is actually one of my biggest gainers, CQT token. And VXV, another very strong gainer for me, even though it doesn't look like a big gainer here on the weekly, 18%. For me, that was actually a very successful trade. So yeah, I did sell out of all of these tokens, and now I will be waiting to repurchase them if we see a proper pullback on the market, a proper correction. But for the moment, my focus is on Bitcoin and Ethereum because yet again, they are now driving the market, especially Bitcoin. 30% in the last 7 days. From the top 10 here, there is not a single coin that is outperforming Bitcoin, that is doing anything better than Bitcoin. So even more of a reason right now to put your focus on Bitcoin. Right, now let's go into the chart of Bitcoin, and I'm going to look at Ethereum as well. Let's take a look at some price targets. Alright, but before I actually move into the charts, a quick reminder about my current giveaway. As you probably know, or if you don't, I'm currently running a giveaway of One Key Classic. This is the latest hardware wallet device that I started using. I'm replacing an older hardware wallet that malfunctioned, so I decided to go for something that is brand new. This device is also supporting NFT transactions, DeFi transactions, Web3, everything, and it's got support for thousands of tokens, all the major blockchains, a lot more than the device that I'm replacing this with. So definitely go and check it out. It is super light, super thin. It's the size of a credit card, and it's the thickness of 2 credit cards. It is lighter than my crypto.com debit card, which is actually a metal one, so it's actually quite heavy. And this right now is my favorite device. Honestly, it is so good. Go and check out my review. And as you check it out, make sure that you leave a comment, because I will be picking one of the comments to be a winner of one of these devices for free. The company, I reached out to this company and they agreed to make that giveaway. So I will actually pass the details of the winner directly to them. They will send you the device directly coming from the manufacturer. It's not a device that I have and I will be sending to you myself or anything like that. So there is no room for error. It will be factory sealed. It will be brand new device. All right, so that's it. Go and check out my review. Make sure that you leave comments. You can leave more than one comment. Just draw my attention. This is how I'm going to pick the winner this time. It's not going to be completely random. I will pick a winner from the comments that impresses me the most. Okay, now let's move on to the charts. All right, so let's start with the daily here on Bitcoin. So what we can see from my previous analysis, we managed to break through all of these resistance levels that we had very quickly with a lot of velocity. I mean, a really strong move here, and again we managed to climb above the 50th moving average, which makes me quite bullish. We also have a bullish cross on the 9th and the 50th moving average coming very shortly after the bearish cross which we printed just a few days ago. This is all good. However, we are now bound for another pullback, probably a minor pullback, but definitely a pullback is coming. We can see that simple RSI is approaching the overbought region. It's not there yet, but stochastic RSI is already in the overbought region, and it's printing this bearish cross. So it's calling for an immediate pullback. A minor correction is what I'm expecting here. we did also have a drop in the volume as we started climbing here above the 25,000. That was a strong resistance, as I didn't really expect, and I said it in my previous analysis, I didn't expect that we will break this resistance so easily, or so quickly, I should say, because a few times we failed, right? So we challenged it here, a few times we challenged it, and every time we got rejected. So then we came here, we challenged it, we got rejected at first, but on the next attempt, we managed to climb above it. Are we going to be able to hold this level? This is the question. I personally feel that we will drop again below the 25,000. That will be the pullback that I'm expecting right now. But we do have now a support, which used to be a resistance at 23,800. So if as we start going downwards, this is the support that will hold us. Typically, as we are making this kind of strong rallies, we come down at least to the ninth moving average, and it acts as a support. As you can see right now, this ninth moving average is sitting at the same level as the previous resistance that we managed to break above. So definitely this right now is acting as a good support for us. So 24,000 or the higher 23,000, 23,800, 23,900. This range here is now acting as a support, and I'm expecting that as we make a pullback, we are going to come and retest this level, and we're going to find support here. Looking at the higher time frames, this is the 3-day chart. Here we actually have the RSI looking much better. The stochastic RSI is just coming out of the oversold region, so we still have a lot more room to be going upwards. So the higher time frame is actually looking more bullish. However, the simple RSI is still quite close to the overbought region. But this is the 3-day chart, so we have more room. We have at least another week before we can look into this RSI coming into the overbought region. So this is why I'm saying that a pullback is inevitable, but I'm expecting it to be a minor one. This is the MACDs, and we have a bullish cross forming here. So still further upwards momentum here to be built. Let's take a look at the weekly. And the weekly is also, I mean, this week we are getting this bullish signal on the Aurochs indicator. And because this is the weekly higher time frame, this is actually indicating that for the next week, a couple of weeks, maybe even more, we're actually looking at a bullish scenario here. Now let's take a look at this indicator, the stochastic RSI in the overbought region. However, still printing it made a pullback, and it's now printing a bullish cross. So a continuation of this bullish trend, a continuation of the overbought region is going to follow, and we can stay in this overbought region for another couple of weeks or something. But definitely after that, we are going to be looking at a correction, a proper correction that will be, quite a decent one. So don't get too greedy at this point. I mean, I think this right now is a good scenario to be played for the shorter term. So, kind of swing trading, short term trading is good for right now. I'm not really sure whether you should be looking into entering in terms of a long term at this point, because the volatility is still high and it will continue. The market is quite choppy. We'll see how it goes, but MACDs are also getting quite far apart, so I'm expecting that we will continue here upwards momentum for a little longer, and then we're going to see them tightening together, perhaps printing a bearish cross around this region here. This could happen in April, so it doesn't have to be right now, but for the short term, we are looking quite bullish. So over the next few days, even if there is a pullback, which I'm expecting, it will be a short-term pullback. I'm not expecting falling into a bearish trend at this point. If anything, we are decoupling with the stock market as of right now, and this is good. It is giving the bulls even more confidence to actually go for it. So I'm expecting that the 26,000-27,000 are going to be challenged very soon. In fact, let's take a look at what we did from the last move, and what can we expect on the way up. Well, we do have a resistance, so this is really the target here. The golden Fibonacci ratio is at 28,600. This is really our goal right now. This is where we are heading towards. We have from our previous moves, we have here rejection point at 28,300. So really this is the level, but we don't really have anything before that. So the path is quite clear from where we are right now all the way to this level. So this is my target. If I'm looking into unloading Bitcoin, it will be at this point. As we reach the upper or the middle even 28,000, I'm going to start selling. So for the moment, I'm still holding my positions. I'm staying in Bitcoin mainly because, as I said already, the Bitcoin dominance is growing. Right now, we are not in an out season. We are not really great for outs. As you see, Bitcoin is now over 25,000. A lot of the altcoins are not even back at the levels they were just a few weeks ago when Bitcoin was at 22, 23,000. So, when Bitcoin was here at 23,000, a lot of the altcoins were much higher than they are today. So Bitcoin right now being well over that price range, and those altcoins not even being back at their prices from a couple of weeks ago, it's not a good sign. You don't really want to be in altcoins right now. And I'm talking again about trading. I'm not talking about investing. If you're investing for the long term, then it's a completely different strategy. So you don't listen to me if you're looking at the long term. Right now, I'm talking short term to medium term trading. I'm talking swing trading, position trading, taking profits at big moves like this right now. I'm taking profits from altcoins that I have profits. I'm locking in profits. I'm exiting positions in altcoins. And right now I'm focusing on Bitcoin and Ethereum. Talking of Ethereum, let's take a look at the chart of Ethereum. And what is this right now? The daily. Okay, so on the daily, as you can see, we're actually at resistance level. And it's very important to see if we're going to manage to break above this level. We do have overbought stochastic RSI indicating that perhaps we're going to see another rejection here. And this is on the daily. The good part is that just like with Bitcoin, we have printed a bullish cross on the 9th and the 50th exponential moving averages. This for me is important. This is bullish for me. A pullback from here would most likely take us to the 9th moving average, and it will confirm it, or at least will retest it as a support. A lot of the times when we have this kind of strong rallies, this is acting as a support. You can see it here. This is a strong rally, and the 9th moving average was our support. We came down to it, and we bounced up from there. Then we got quite far from it, so of course we managed to pull back. And as we pulled back, we found support at the 9th moving average. Then we had another rally where we kind of went far apart, and then we pulled back. We broke it very briefly, but for the most part, it actually acted as a support. And we were just consolidating around this 9th moving average, and it was acting as a support all the way until at some point we found a lot of bearish momentum, and the bears managed to take over and pulled us below it. But then the 50th moving average was acting as a support. So that's why I'm using these moving averages, because a lot of the times we can read the market just based on these moving averages. Of course, every now and then we break them, but this is also part of reading the market. As we break below them, we get quite bearish. So if you manage to exit, your positions just at the break below this 50th moving average, not really below the 9th. The 9th is not an indicator of a bearish trend just yet, but breaking below the 50th is important because then we drop much lower. So exiting your position at this breakdown from the 50th moving average is saving you from, a much more significant drop. You can see here, this is a 10% drop. You could save yourself from this 10% drop if you exit at the breakdown from the 50th moving average. And then you can re-enter at the break up from the 50th moving average. Now, in this case, you are basically saving yourself from that 9th 10% pretty much drop, but you are buying at pretty much the same price as you exited. So might not be great for you, but you are saving yourself from a potential downfall, because as we break below the 50th moving average, we can go into a much deeper correction. It didn't happen here, but it surely happened, in other occasions. Like here, for instance, exiting at the breakdown from the 50th moving average would have saved you from a 26% drop. And then you could re-enter at the break up, even if it's a fake out. You can of course re-enter and set up some stop losses and protect yourself from another break, because this here break up from the 50th moving average was very short lived. It didn't last. It was a fake out liquidity grab, and then we went down again. But you can see we managed to finally find enough confidence in the bulls, break above the 50th moving average, and make a very strong rally. So typically I enter as we break above the 50th moving average, and I'm riding all of this wave on the way up, all the way until we break down. I'm exiting as we break down, and then I'm waiting for another break up. So even though in this case I didn't really make a profit from this trade, the breakdown and the break up was pretty much at the same price. I wasn't sure whether this would be the case, right? It could have been another repeat of what happened here, where, we went much lower. And of course, if you exit at, what was that, 1,400, and then you re-enter at 1,250 as we break above the 50th moving average, then this is a very good trade. First of all, you saved yourself from a drop to the 1000 range, and then you re-entered at 1200, and you are riding the wave all the way until 1585, or mid 1500s. So this is quite a decent one. Another thing that I do sometimes is I'm not actually waiting for us to break the 50th moving average. A lot of the times I would exit as we break below the 9th moving average, if I see that the 9th moving average is getting closer to the 50th. Thus, I'm expecting this bearish cross that is happening here. So as I see that we are falling below the 9th moving average and it's no longer acting as a support, and we are, quite a few days here dropping below that 9th moving average. At the same time, the moving average is moving closer to the 50th, and now I'm anticipating that I'm going to see that bearish cross. Then I'm not going to wait for us to actually break below the 50th. I would exit around here before we see that bearish cross, before we break below the 50th, because it becomes quite apparent, quite obvious, or very likely, let's say, that we will break the 50th as well, because we have already lost the support of the 9th moving average. So this is just one of my strategies. It is a very winning strategy. It works for me at least 7 out of 10 times. So for me, this is quite a good ratio. Now, looking at the weekly chart of Ethereum, what we are seeing is that here we have that 50th moving average. Even though the weekly 50th moving average is not the most important one, but here, as you can see, it's acting as a resistance and very indicative of what's happening right now. We challenged it once already, we failed. We are challenging it now, and we are failing again. So this moving average is the reason, perhaps we can argue, it is the reason why we are seeing this rejection from this resistance point at this right now. Also, we are seeing that in the stochastic RSI, we are in the overbought region. We are printing this bullish cross, so we can continue here the bullish momentum. It's not necessarily calling for an immediate pullback, but that rejection from the 50th moving average is showing a weakness in the buyers. It means that at this price level, the buyers are not really that confident anymore. They're not that strong. So a pullback, I feel it would make sense, at least to that support level here at the mid 1600s. So this is what I'm expecting for the next few days. But overall, this is still not a bearish looking chart to me. So I feel that we still have more strength to continue the rally after a minor pullback. If we find the support here, I'm expecting, and of course, depending on Bitcoin, I'm expecting that we can continue here the upwards price action. Alright, well, this is everything for today's episode, guys. Thanks for staying until the end of this video. Much appreciated if you leave some likes and comments below. Let me know if you have any questions. So let me know which are the tokens that you're holding, and if you're selling or if you're buying. I would be interested to know that. Also, another reminder about my current giveaway. On Sunday, I will be picking a winner. Make sure that you go and check out my review of this device here, One Key, my hardware wallet, the latest hardware wallet that I started using. This is a very light and very easy to use in terms of interface and everything. Very easy to use device. It supports thousands of tokens, you know, all major blockchains and all of their tokens and everything. I'm really impressed with this device, and it's now my favorite. I'm replacing Keep Key, which malfunctioned. I already said that in my previous videos. I couldn't really get it to upgrade the firmware. I spoke to their customer services. They only gave me very generic responses, and they're not really able to help me very much. So I'm done with Keep Key. It's a device that I've used for about 6 years, and at this point I'm not really keen on it anymore. I don't even like the way you operate with it, because they changed too many times, and every time I connect it to my computer, I have to upgrade the firmware every time, which is when mistakes happen, and which is when the mistake that I'm currently suffering from happened. So I don't really want a device that every time I connect it, I will have to be upgrading the firmware. That's not good enough for me. So I'm now going to be using One Key. Even though it sounds like a similar name, One Key, Keep Key, okay, they have nothing in common. This is a company based in Hong Kong. I interviewed their head of business development, Sean Han. We talked about security and everything, because security, of course, is the most important part of every hardware, for any hardware wallet. And this has 2 chips inside, you know, to provide even extra security, not just a security chip. Anyways, you can actually find out all about this if you go and check out my review. But not only that, leave comments below that video so that you can actually enter the raffle that I'm running right now. On Sunday, I will be picking a winner from the comments. Make sure that you leave an interesting comment to draw my attention to it, because it's not going to be completely random. This time I will actually pick a comment that impressed me. So this is your goal right now. This is your challenge. You need to leave a comment that will somehow draw my attention to a point where it impressed me, and I will pick it as a winning comment. Good luck to everyone who takes part in this giveaway. This is everything from me. By the way, while you're here, make sure that you check out one of my other videos. And one of these, of course, is the review. So definitely go and check this one out. This is everything. I'm gonna see you in the next one.